What's up, guys? Welcome back to the Hustle Podcast. My name is John. I'm your host, and we got my co-host,
Gabriel Arambula.
And if you guys are new here, what we talk about on this podcast is everything relating to business, mindset, how we can add value to you guys, and also how myself and Gabe, we share our 25 years of entrepreneurial experience and mistakes. That way you guys know what to avoid. And as you guys know, we also bring special guests from time to time. For today's episode, we have my guy, Matt in the house. He's been in the game for quite some time in the mortgage space. He was a processor for 15 years, and yeah, he took some time out today to give us some value. Share his process.
We want all your value, Matt. Give us all
We
your
want
value.
all your value.
Yeah.
I'm gonna siphon the value.
Give me all your money.
Siphon.
Yeah, empty out your pockets.
Holding you hostage for a bit. Well, yeah. Without further ado, episode 32.
32.
32,
Is it 32
guys.
or 33?
32.
Yesterday was 31.
31.
Oh, how the time flies.
Yeah, we have, yeah.
And it's only been like what? How many? Like 3 weeks?
Bro, 3 weeks?
3.5 weeks. What's today? Wednesday?
Yeah, dude.
Is today okay? So there's 7 days in a week, right? Wednesday's the third. No, I guess technically Wednesday would be the fourth day because isn't Sunday technically the first day of the week?
Yeah.
These are things that an adult
Let us know what
should
you think.
Huh? Matt's like, how old are you, Gabe? Like, did you learn this in grade school?
He's like, what's going on?
Yeah, no,
Yeah.
heck yeah.
Yep. But yeah, it's gonna be a good pod today, guys.
It
gonna
is.
Be really
How
good.
do you know that, Johnny? Are you psychic?
I am a psychic on some
You're
days,
not.
only
You're not
today,
psychic.
but I'm
Fine.
actually not. I'm just saying. However, but yeah, Gabe and I were on a car ride today, and we were just talking about like the mortgage space, wholesale lending, how to make the process more streamlined.
And what our episode was going to be about today.
Yep, that's right. As you guys know, we talk about the topics day of.
Yeah, pretty much for the most part. We just kind of like it's like if you think of like a raffle, and there's a bunch of ideas in our head, and anytime we think about an episode, it's like we stick our hand in the jar or like the fishbowl, and we pick something out.
Oh yeah.
And today that's what we picked out. Like, John is a sponge, and he always likes to learn. And fortunately and unfortunately, I've retained a lot of information. So John's asking me all these freaking questions about loans, programs, processes, procedures. Just he is sticking his hand in my jar brain and like just trying to pull information out. And I begrudgingly give the information. It's early in the morning. It's tired. I don't want to talk.
Hasn't had his
I want
coffee
to
yet.
listen to music. Hadn't had coffee. He's drilling me, and so. But I know it's going towards a good cause. It's kind of like feeding orphans. So when he's asking me for information, I'm just gonna give it to him. It's like that's my
with attitude too.
A little bit.
He's like, all right, John.
Attitude. I'm a little mean sometimes, but it's tough love and it's psychology.
No reaction.
See, I'm yeah, bingo.
No reaction.
Exactly, tough. It's tough, and he's getting. And so we're thinking like, what would be a good idea for a podcast? And I started thinking business because we were talking about that. Normally, we don't do business in the morning. We just talk about like, we talk about business, but we talk like you listen to some of the podcasts, yeah. Like
absolutely.
we talk about like just like leadership, life, business, and all that stuff. But like this, I was feeling should be a little bit more. I wanted it to be a little bit more business centric, specific to the mortgage space, because John's asking me all these questions, Matt. Like, hey, what's the system and what's a good process? Like when you pre-underwrite a file, and I'm like, oh my God, okay, here we go. This will be a long one. What I'm thinking, I'm like, Matt was a processor for how long?
About 15 years.
15 years.
15 years.
Processing. Now, in that time, was it with one company, multiple companies? Like, kind of walk us through that. That's interesting.
Here, pass the mic to him.
Yes.
I was processing.
Mike, that's a little
put
mic
it right here.
right there.
Processing for multiple companies. A lot of experience. Just learning retail and wholesale.
Yeah.
Just pretty much did both.
Yeah.
So I did get a lot of learning experience and just a learning curve for that. And just pretty much, talking to my borrowers, brokers, loan officers, and just mortgage lenders in as a whole.
Now, let me ask you this: like, what would be so 15 years is a long time, like 5 years is long, 2 or 3 years is a long time. And if you're a guy like John, like friggin' like the way this John learns, it's like a year is a heck of a long time. But when structuring and putting files together, like what would you say, like from a processor's perspective or a word of advice or words of advice to loan officers and mortgage brokers, like what would you say are some nuggets or ways that they can ensure that their files not only get processed quicker but get closed quicker? Because I'm sure you've seen some like dumpsters on fire across your desk, and I've seen and like I've cleaned up and I've had um, these files, and there's an array of them. But what does that look like from a processor perspective? And like, what advice can you give brokers and loan officers?
I'd say from the beginning, if you have a complete 1003, which is mortgage application, if it's filled out correctly with all the pertinent information, it makes our job easier as processors to make sure that it's processed correctly. The more detailed the information is on the application, the better that it's going to go through. So it's pretty much just scrubbing the overall application 1003.
So okay, so on that note, and you bring up a really good point because John and I were talking about this. And John has been asking about AUS, right? In DU, right? So desktop underwriter, automated underwriting system. He's been asking about that. And, today I think may have been a little bit of an epiphany, right, John? So tell us about it.
Epiphany?
Yeah, when we're talking about AUS and DU, like garbage in, garbage out. You don't recall the conversation?
It's in the moment. So.
It's in the moment. So he doesn't. So when he asks, so now I know when he asks me all these questions and I give him answers, he only retains about half of it. So what I'm gonna do?
100%. I want Gabe to talk today.
Oh God, I don't want to talk, bro. I'm tired, dude. Okay. So one of the things we were talking about, Matt, or what I was explaining to John was, an automated underwritten approval, right? And so for you listeners out there, if you're not in the mortgage space, an automated underwritten approval is just that, an approval that's rendered by a system upon inputting information pertinent to a loan transaction and a person looking to get the loan, otherwise known as a 1003. Right, a loan application. And so what Matt is saying is ensuring that you complete a 1003 thoroughly is going to aid in the processing and expediting of a file. But not only that, it's also going to render accurate results when you're running DU, right? Because I'm sure you've had files where, in fact, well, let me ask you this. Have you had files that you originally ran through DU and did not get an approval, but then you cleaned up the file and made sure everything was accurate in the 1003 and then you got an approval?
Absolutely.
Like, what are some of the things, or what are some of the most common mistakes that you see from loan officers and brokers when submitting files in 1003s, or like mistakes in 1003s that could be easily resolved?
I would say years at a job, employment history, maybe not enough reserves on the application. Just pretty much as far as the job information is the key thing too as well. And then making sure that all the properties are on the application. Just asking the right questions. Anytime you're taking an application, you want to ask all the right questions because it just helps us, within the approval process.
That's perfect. And once John decides to recollect what I told him in the car ride in regards to automated underwritten approvals, I think he's going to realize that one of the things I told him was that making sure you have the right amount of assets, making sure that income is calculated properly, all these things play a factor and getting an automated underwritten approval. And like when you get that automated underwritten approval and everything's accurate in there, it's like a slam dunk loan, right?
Well, it's not always a slam
Not
dunk.
okay, not always a slam dunk, but for the most part, if everything maps and you got all your
Right.
documents together, it's going to be a fairly, you know, easy loan.
I mean, I think when you're running credit and you're checking all the liabilities, making sure everything fits the guidelines, it is going to be a lot
Yes.
easier when you are
Yep.
running DU to get an approval. But at the end of the day, you have your liabilities in line, your DTI is in line, all the properties, it'll be pretty much a lot easier.
Dude, nice. Now, can you remember a file or can you recall a file? And I'm thinking of one in my mind right now that you got a DU approval on and you're like, wow, kind of like shocked and surprised. And you're like, whoa, okay, cool. Let's go to the races.
Absolutely.
Tell us about it. No names.
Um,
No addresses.
Yep.
High credit score.
But we need socials.
Yeah. I mean, high credit score, been at a job for 10 plus years. W-2s are online, pay stubs. Pretty much we have everything that we need to get an approval. Those are the easier ones. So those are the ones that we always are excited to even get to be able to process because pretty much we have everything that we need to get an approval.
But do you have any like crazy scenarios? So like I'll give you an example of one where, and this was when I was a retail loan officer in the retail space. You know, we were calling trigger leads. You know, predictive value trigger leads. It was in the evening. It was like after 6 p.m. or something. No. Was that? I think it was New Jersey, and you know we couldn't call after 8, so it must have been like before 5, like in between 4 and 5 for me, right? It might have been after, I don't know. But calling Jersey, talk to a borrower, and they've been trying to get a refinance, a cash out, not able to get it done. Talk to a number of people, and she's like, well, you know, might as well give you a shot. She tells me, real nice lady. And so, you know, I take the information. Long story short, I was cash out refinance, primary residence, sub 600 FICO score. It was like a 590 or something like that. And what else? There was something, I think there might have been like a mortgage late, maybe like 24 to 36 months seasoning. And and so I got an automated approval. Now, the strengths in the file were employment history, right? DTI was reasonable. The LTV was I think just 70, and we're doing an FHA, right? And so, you know, I think something to learn from that for loan officers and then also for borrowers is that even though you might not have the ideal loan scenario, there may be a solution, there may be an option. I mean, I had a deal that another like large nationwide lender could not do. They denied it. And it was a simple delayed financing transaction. The borrower's fiance gifted him $1 million to buy a property. That money came from a line of credit that she had at a bank, and he simply wanted to refinance to take a portion of that out, 75% LTV. And this other big bank did not want to do it, but we at theLender, we were able to do it. We got it done, no problem. And so again, like as a borrower, even as a loan officer, and again for loan officers out there, if you've been in the game a while, like you pretty much know when a deal is a dead deal and it can't be done, right? And especially like being a processor, like I'm sure you've gotten files, Matt, and you've been like, why is this even on my desk? Like this is going nowhere but in the trash can, man. Like what?
The shredder.
Yeah, into the shredder. You know, there's those files when you're a seasoned loan officer, you could tell, but you know, if you're not a seasoned loan officer and and or if you're a consumer, if you're a borrower, and you called and talked to people and couldn't get solutions, put a comment in the comment section. Send us a DM. We'd be interested in finding out, and maybe we can help talk through a solution on the show. I'd be more than happy to do that. We'd be more than happy to do that. It gives us something to talk about. And one thing's for sure, within the resources that we have, there is a wealth of knowledge in the, just because we're in an office with, a couple hundred people. So we get answers. I bet you my people are smarter than yours. No, no, I don't know. I can't, but I'm pretty sure. I'm pretty sure we are. But so okay, so Matt, processing to AE here at theLender. Um, like, what are some of the differences in the role? Like, pros, cons, or like not even that. Like just like things you like, or what caused your interest in the change, going from a processing role to an account executive role.
I think the transition. I think the transition to becoming an account executive versus processing is I have a lot of experience in the documentation already, and as far as communication side, it's just more of making sure everything's in line to become the best AE in regards to putting files together. What I loved about processing was making sure that everything fits to the point where I'm communicating with my borrowers and making sure that I set proper expectation as far as when the file goes from A through Z as far as to closing. Communication is key. If you set proper expectation, set some guidelines and some deadlines in regards to when the file is going to close, then the better. You're just going to have a better experience overall. That's what I loved about the transition, because I already know the proper documentation, and now it's just getting that file to the closing table pretty much.
And it really, it really is just that simple with the loan side of the business. It's almost like connecting the dots. And that's what John was asking earlier today in the on the ride here, was just like pre-underwriting files. Because as a loan officer, I would do my best to pre-underwrite files. And even as an AE, I kind of like to see, I want to know what's going in. Because like what happens once an underwriter sees a file map, what happens? Once an underwriter sees that file, what happens? What does that mean for that file?
Well, I like to review the credit report. I like to review the credit report, the title report, making sure everything is pretty much on there as far as what they're saying is on there. You're just dissecting the file overall to make sure that you're going to get an approval, number one. But I like to always review the credit report, and the title report is key because it's going to show the liens on title. It's going to show proper vesting. It's just going to show anything that you need to know on the title report to make sure it fits credit guidelines.
Dude, okay. Now let me ask you this: what are some conditions that an underwriter would render on a file? And it could just be random conditions like John and I were discussing, and he asked what kind of conditions would come up, so I threw some his way, just to give him some oddball conditions. But what are some conditions that you've seen, random ones that you remember? The funnier the better, if at all.
The funniest one.
They're not even that funny. It's like a loan condition.
Yeah.
If anything, they're kind of depressing.
That's right.
I wanted to just say, you get a lot of letter of explanations on your overall situation, on why you're trying to obtain a loan.
Yeah.
So it could be moving from different place to place. It could be different jobs. It could just be not meeting the proper job requirements as far as employment history. So you do have to do letter of explanation in regards to those type of manners.
Yeah, that makes sense, and that's kind of what I was explaining to John is, with that, and that's funny because that's the first thing I mentioned to John. I was like, letter of explanation, like, okay, why is this address showing up on your credit report and not on your 1003? And there's all those little nuances, and so from a a loan officer or mortgage broker perspective, having an account executive like Matt on your team is very helpful, because Matt is going to look at the file to make sure you're structuring it properly. It's like a second set of eyes. It's not to say that as a loan officer or mortgage broker, you don't know what you're doing, but it's good to have the extra level and layer of support, because with mortgage loans, there's so many different nuances from a borrower's perspective. So from a consumer's perspective, it's they think it's as simple as like, hey, what's your interest rate? Right?
Right.
Like, hey, what's your interest rate? Like, what do you mean? What? Well, it depends, because every loan scenario is different. There's multiple characteristics of a borrower that will render an approval with a particular loan program that render particular terms, right? There's things like, it's a risk-based analysis, right? It's like the three legs of the loan: your income and your employment, your credit scores and history, and your loan to value ratio. And it's an analysis of all three layers of risk to help determine the credit worthiness of a borrower. And the stronger your profile is as a consumer, the better terms of loan you'll qualify for. And it's something that, consumers need to know. And preserving your credit, not overextending your credit utilization, staying well below 30% utilization on your credit cards is critical. Paying those credit cards and car loans, paying everything on time is critical. Like, your credit score and your credit history is like everything. If you have an impeccable history, people will hand you money. Banks will hand you money, and you'll be able to leverage that credit to acquire appreciating assets like real estate. So, from an overall consumer perspective, digging in to that view lens, because I think it's important. We have an audience of many, right? I think my kids even watch this, listen to this, right? We have an audience of many, and it's important to know that your credit profile is everything. Like, and it all comes down to like behaviors and what things you value. And we've all made mistakes, and you can repair your credit. I'm gonna have Will from Empire Credit Solutions come on here. He's a good friend, and credit repair expert, and he'll break down some items to be cognizant of. But it's important to preserve your credit. And from an overall loan officer perspective, having knowledge of credit and being able to coach borrowers on how to get to where they need to be in order to accomplish their goal. And it was brilliant. John, when we were driving here, he mentioned, oh, so yeah, like you basically like coach the clients on what they need to do. And I was like, bingo, exactly. And that's exactly what ICE does. So one of my other business partners, loan officer, realtor I do business with, she will get a lot of business from social media, from TikTok and stuff, and she'll coach these borrowers on how to get their credit scores up, and how to essentially improve their situation to qualify. Because a lot of people don't know. They think like it's just okay, if you have a job you're gonna get a loan. No, like, how much you get paid. Do you get overtime? Let's talk about overtime. Like, Matt, can a borrower always use their overtime, and if so, under what circumstances?
Absolutely, just for qualification purposes, just to bring the DTI down. Absolutely, you can use your overtime for qualification.
Okay. Now, let me ask you this: what, in order to be able to use the overtime, what does the underwriter need to see, or what do they want to see?
Just want to make sure, just they want to see your overtime's consistent. They want to make sure it's on your pay stubs as they calculate your W-2s and your pay stubs. They want to make sure it's consistent. How many hours of overtime you are averaging per week, even per month.
it's like literally like a science. They're that detailed. They want to see, okay, let's say year to date overtime. Can we get the last paycheck stub for 2024? We need to see year to date overtime. If we don't see year to date overtime on that pay stub, because not all pay stubs have year to date overtime on them, they're going to want to see a written verification of employment stating how much overtime you had for said years, a breakdown of the income. Like, it's so detailed. It would bother me some. It would have bothered, like, I would just kind of get like, when borrowers would be like, oh, I got to get you more paperwork. I'm like, yeah, you're asking to borrow like $750,000. Of course, we need to see updated paycheck stubs. Hello, would
Right.
you lend you $750,000? Probably not. You know what I mean? Like, you probably would. I wouldn't lend me $750,000 to. I'm like, what am I gonna like, dude? Like, get real. Like the golden rule. You know what the golden rule is, right? He who has the gold makes all the rules. That's the golden rule, and the bank has the gold, and so they make the rules. So, I mean, whether you're a loan officer or borrower, that's the reality. And from a loan officer perspective, you need to be able to navigate the terrain and the lending landscape to identify who your key players are in the market. I mean, what are a couple of the new um, either new or nuances in guidelines that we have right now, Matt, that you feel loan officers and brokers could take more advantage of? Like, talk a little bit about that. Like, what separates the lender from other wholesale banks that are out there, and why would a broker or loan officer really want and need to contact us? They at least have us as a contact. Like, put us on your roster. Like, why should we be on loan officers and mortgage brokers rosters? Like, talk about that for a minute with our little mic. We need a bigger mic when I do that.
Yeah, we need like a
John,
full one.
I need a golden mic. Can we get a golden mic?
Yeah, we'll figure it out.
Yeah, we'll have to get it. We'll get a golden mic, but for now we have the little black one,
Yeah.
the lapel mic. So going back to the question, like, why should we be like, we're not like, I don't necessarily think we should be like, we need to be like the top. I think we can, but like, get to the top three, but like, just at least at the very least get us on the roster. Like, why should we be on at theLender? Why should we be on mortgage brokers roster?
Let me comment on that. So I want to say our communication, number one, two, providing our specials, providing our turn times. I think it's creating that experience for our brokers to be able to process a loan seamlessly and get it to the closing table within a timely manner. I think that's what separates us from a lot of lenders, is just because of the turn times. Number one, and then number two is proper updates with our brokers, making sure that we're providing them updates at least 2 to 3 days. Every 2 to 3 days, we're providing updates, and also just letting them know when this loan is going to close, and making sure that there's proper communication with underwriting as well. I think that's what separates us as far as getting using us as a broker.
Now talk about like, from a product perspective or a niche perspective, or like, what are some recent guideline changes that we had, or product offerings that we've had?
LTV, higher LTVs just based off of different programs.
Okay,
Cash outs.
Boom. Yeah, so I was going to ask you that.
Boom.
So cash out refi, on our Noni product, if a property is debt servicing at 1.25 or above, we can go 80% cash out. 80% cash out on a DSCR loan. Minimum FICO, John, is it 740?
It was 740.
740 minimum FICO. Max loan amount $1 million.
Max, yeah, $1 million.
Max loan amount $1 million. So, if you're out there, you got a DSCR property, you need to do some cash out. We go up to $1 million, 740 FICO score, 80% LTV. Debt got to be debt servicing 1.25. Okay. Now, that doesn't include our Super Noni product. Now, John, like, break down our Super Noni product. What does that do, John?
Yeah. For a Super Noni, let's say, for instance, you're not debt servicing, right? Let's say it's between 0.75 and 0.99. your borrower can actually use their assets, divide that by 60, and use the sum and just add that to the monthly rents to meet the debt service requirements. As long as it meets 1.15, then they can qualify for our DSCR product lines.
Nice.
Right? They can use their assets.
And then that's going to give the borrower pricing as if it was debt servicing, basically, at a 1-to-1 ratio, which is huge. So again, to break it down, let's say actual rents are $2,800 a month, and let's say you take the borrower's assets divided over 60 months, and the sum is let's say $500 a month. You add that 500 to the 2,800, giving you a net rent of 3,300. If that 3,300 equates to a debt service ratio of 1.15%, you got yourself a deal, and you're no longer having to take a no ratio loan rate, because we do that. Like, if a property's not debt servicing and your borrower doesn't have assets and they can't do that, we can still help you.
Yeah.
We have options, right? And I think what I've discovered with theLender is that we have, like, it's like we're almost like an English muffin, and within the English muffin there are nooks and crannies, right? And within these nooks and crannies we get these deals done. That's where the butter all kind of just rests, in those nooks and crannies, right? And we all like butter in our English muffin, if you're anything like me. And this isn't an English muffin commercial.
Quick, for those who don't know, what are nooks and crannies? I'm like, what are you talking?
Nooks and crannies are the little craters within the English muffin. Yeah. So you know, when you got the English muffin and it's open, the English muffin is in half, and then the nooks and crannies are exposed. You see the nooks and crannies in the English muffin. That's where the butter all gets stuck in the jelly. The jelly and the butter it's a pool of butter and jelly if you're into it.
We need an interpreter now, right?
And see, us at theLender, we got the nooks and crannies, right? And those nooks and crannies are like, 80% LTV, cash out refi on a DSCR. Another nook and cranny, asset depletion on DSCR loans, right? The asset depletion alt doc loan. That's another nook and cranny. And so it's like, you have some lenders, it's just like a plain, toasted Wonder Bread with margarine on it. But at theLender, we're like a Thomas English muffin with some Land O'Lakes butter and some Smucker's strawberry jelly.
I'm telling you, bro, we need like a freaking translator, Google translator. Like, what are nooks and crannies? What are all these new words? For the first time?
I am so hungry right now. I'm a fool. I want steak, potatoes, an English muffin with nooks and crannies.
Oh yeah.
No, but going back to like why someone would want to work with theLender, and like I funded a loan. My first DPA I ever did as a retail loan officer, and like I did 80-20 loans back in the day. That wasn't a DPA. That was a subprime loan. 580. Could you believe it? If you had a 580 FICO score, you could get 100% financing. With the 585, 100% financing. Bro, insane. I should have been buying properties up left and right. But anyways, I digress. No, I'm not saying I actually had a good FICO score then. I mean, now if you add up all three of my FICO scores, it might equal up to like one of John's maybe, or one of Matt's. I don't know, or maybe not, or get close to it. Like almost see it in the distance. Like, I see you. I'm almost on there. I'm almost on there. But with theLender, I mean, having like niche products like our DPA, right? Having great pricing on FHA. Our FHA pricing's smoking. Like when you price this out, like I don't like, and even as a loan officer, I didn't really hang my hat on Loan Sifter to price out loans. I always like going to the particular wholesale bank's pricing engine or looking on the rate sheet to price stuff out. I would go through Loan Sifter to kind of get a gauge, but I don't trust it. And I don't have trust issues. I'm very trusting. In fact, maybe that's my issue.
Yeah.
Is this another counseling session, John?
I
That's
guess
what
it
it's kind of
is.
like, man. That's kind of what it's like, man.
Got him.
I think I almost feel like I'm on the Truman Show
Hey,
sometimes.
Matt and I teamed
in,
up to counsel you, buddy.
in these
For a therapy session.
these podcasts are like therapy sessions. Is what I feel like
I had a
sometimes.
question for Matt though.
Yes, grab
You know,
grab the mic,
you
Matt.
know,
There it is in all its glory.
like knowing that you've been in the process side for 15 years, like of course when you're talking to your brokers, you're talking to them in like a certain way where you're making the process smooth, it's streamlined, you're making sure that they're submitting the files properly, and having effective communication. Could you run me through, I guess, how do you approach like having that effective like what does that effective communication look like with your brokers, right? Let's say, I know yesterday we spoke, you were mentioning how if you want to set the right expectations too, right? Like touching that a little bit.
Just touching base on communication, just again setting that precedent from beginning to the end, just ensuring my brokers know, and just ensuring them to know that their experience with us is going to be a smooth one. Setting proper expectation is the key just to understanding, for them to get that trust in us to be able to process their file.
Right.
So I think that's just the key. I always make that as a key point because in order for them to trust us, we definitely want to hold them by the hand and make sure that they have a good experience with us.
Right. Pretty much like you want to like the things you say to them, right? You want to like follow. You want to back it up too. Or let's say, for instance, you say, "Hey, you can reach out to my account manager within, they're going to get back to you within 24 hours." But if they end up getting back to the broker within 48 hours, they're like, "What the heck? Like you told me this," and then like because that happened, it already broke a lot of trust, right? So I like how you mentioned that if a broker asks you something, you can actually back it up. You follow through with what you say you're going to do, and that literally builds the credibility, and it continues to add up as well.
That's
Right.
correct. Just making sure they have all the correct information as far as my contact information, my account manager's information as far as the loan processor. I'm just going over proper guidelines, daily updates. Sometimes maybe every other day I'm reaching out just to see how they're doing, any questions or concerns that I can help out with. Those are the main things that I like communicating with as far as my brokers.
Yeah, that's huge because like a lot of the brokers that I spoke to, like the reasons why they will leave a lot of like their wholesale lenders is because of lack of communication.
That's correct.
Right? Whenever you're getting a file submitted, they're relying on you, like they're giving you that trust to like handle it. You have the responsibility, especially when their borrower is like they think everything is going perfectly. They're like, okay, you the broker, you handle it, the LO, you handle it. We're gonna close at X date. I can expect to actually like close, and then all of a sudden you have all these issues come up, lack of communication. All of a sudden they get denied for whatever reason, and that the borrower gets mad at the broker, right? So I, I like how you mentioned the communication aspect is huge. So if you were able to work with us at the lender, you can rely on us for the communication. We make sure that any questions you have, you let us know, and that we are going to make sure to fill you in as well, right? We're going to keep in contact with you. Myself and Gabe, and also Matt as well, we work 11, 12-hour days, right? Monday to Friday, we're here at the office. I know for myself, 7 a.m. to 6 p.m., Gabe as well. What time do you work here, Matt?
I work about 10,
Matt
11
gets here
hours.
whenever the hell he wants to.
He actually gets here before us too.
I know.
Before us, actually.
It's
And
early.
it stays very late. But yeah, any other questions you have for?
No,
for
yeah.
Matt?
So I wanted to just bring light on a couple things, right? Because again, we want to drop any keys we could, and one of the things that when we talk about communication, obviously this is from a deal in process perspective, right? But also like just being available for pricing. Like I know we got a pricing engine that's great, use it, but for scenarios, like contact us, message us. All our contact information it's in the caption, it's in our bio. Like you can look us up. There's a valuable like wealth of resource, right, by reaching out to us to make sure you can get your loan structured and funded at the end of the day. And, in addition to that, just kind of going back to the nuances within the lender. And, I know I get funny, talk about nooks and crannies and stuff, but it's like we're like here, another analogy for you. We're like a Swiss Army knife. We're a wholesale bank that's like a Swiss Army knife.
He's like,
We got something for every little odd scenario. Like even going up to 10 units, being able to do mixed use, going up to 20 acres, having blanket loans. Like there's so many different nuances. And it's like John and I were talking, is like, like, maybe we just tell people we do commercial loans. And I'm like, well, no, we don't. But we have a product that can accommodate something that may otherwise look like a commercial deal because it's over 4 units. So there's a lot that's on the table. But one thing that I wanted to mention is the power of follow-up, right? And this is something that, we were talking about when we were speaking of communication with brokers and our business partners. But from an overall like sales perspective, for any business professionals or sales professionals, I think sometimes we can get a little bit winded following up on certain leads. But we all know sales is not for the faint of heart, and follow up is key. And I know we can all attest to that, and John could attest to that. I mean, it happens on a regular basis where just the follow up leads to the win. And there have been times where I followed up with leads for over a year, and finally I get the deal. And it was because that persistent follow up, and that shows something about someone's character, and that impresses the prospect, right? That shows consistency, dedication, commitment, and these are all characteristics that are very valuable, and anyone on the receiving end will honor that. And one of the things that I've recently experienced is a lead or a broker that I followed up with for a while. We finally got the broker package, and you know uh, finally we're starting to get business. And one of the things that set it off, and this is huge and something worth mentioning, right? With one of the normal banks he does a lot of business with, they had a pricing adjustment, a pricing hit, so a cost to the borrower of almost 2 points, because they were a non-permanent resident alien with the qualifying visa. So with us, we will lend to non-permanent resident aliens with the qualifying visa. So say, for example, a work visa, like an H-1B1 visa. We will lend to those borrowers. They can qualify for our DSCR products, and I'm pretty sure our non-QM as well. Actually, yeah, it should be our non-QM as well, because I was looking at the guidelines yesterday. And so this other bank he has a bunch of deals with, they came up with this it was a 1.85% hit adjustment.
Wow.
It's almost a 2-point hit to pricing. Boom, snatch that rebate. That could be like on a $500,000 loan amount. That's almost $10,000.
Yep.
It's a lot of money. And so now he's sending me these loans. But if it weren't for the follow-up pricing, I don't know how many deals I priced out for him and didn't get nothing. How many times I spent on the phone with them and have good conversations, because he's a cool dude. And he talked business, and he's sharp. He's really sharp. And like, we'll talk about deals. Okay, what if we do this? Can we get this done? What if we tweak this? Hey, can we look at the guidelines of this? I want to make sure this works. And like, so I dig in the guidelines. Like, I love that. Like, I love working with brokers and loan officers that are engaged in the business. I think because I was the very same way. And it's cool because now, like, I'm linked in with his processor and him, and he's got a good team. And from like now till I think last July or something, guy's done over 100 loans by himself, which for one producer with a processor, that's not bad. That's pretty good. That's a pretty good volume for one guy. So if it wasn't for like that follow up, yeah, it was crazy. I was telling John, my first conversation with this dude, he called us back, or like he called me back. It was we're calling off our database, and I left a message, and it was maybe like 6 o'clock or something. It was when we were in the other office. It was like I think a couple weeks after we hopped in the saddle, and it's like 6:30. He calls me back from New York, a New York number, at like 6:30. It's like 9 something. That's after 9 o'clock there.
Yep.
He calls me back. He's like, say, oh, yo, hey, I've been trying to get approved with you guys. Like, I talked to so many people and they said I couldn't get approved. So he didn't have a broker's license, right? But he wasn't, what he knew, but what he was misinformed of is the ability for an individual to get approved to become a business purpose broker. So if you're listening to this, there's about 38 states that do not require any licensing to be a business purpose loan broker. This means that you would have the ability to offer DSCR loans and broker them out to borrowers. And it's a huge opportunity, huge potential, and it's a I would say one of the best kept secrets in business right now. That I mean, if you're out there and you have a sphere, or you're in real estate, you're in lending, and you're thinking like, how can I maximize my resources and capitalize on my knowledge and client base to drive more business, reach out to us. You can get approved to become a business purpose broker. Approval is very easy. You just have to do business. Come to us, talk to us. We'll help put a business plan together for you. And if you get yourself to where you're at least closing like 3 to 5 loans a month, that's a good amount of income. You know, as it all depends on how you structure these deals, but I mean, you can make a good amount of income on each loan. And so when you multiply that and you're doing 3 to 5 loans per month as a business purpose broker, and there's tons of people out there that want and need these DSCR loans, you can make a good amount of money. So if you have some knowledge in real estate or business, if you're savvy, finance, go-getter, very teachable, we can help you and show you how to get approved as a business purpose broker to be able to offer DSCR loans. But I think that's all I got. I think that was a good podcast.
That was a good session.
Yeah, Matt in the house. Dude, it's our pleasure, bro. One team, one dream, man. One of the things I love about being at theLender and being in this office with all these brilliant, freaking like awesome, amazing individuals is, you know, at any given time we could walk in the office and say, hey, Matt, can we borrow you for like 15, 20, 30, maybe 40 minutes, and you know, just have a conversation about random stuff pertaining to life and business over a cup of coffee. And
we just ambushed it.
Yeah,
like,
here we are.
Hey, what's up, man? Hey, yeah, have a podcast with us.
Oh yeah, and then yes, and so check this out. I wanted to bring this up, and I know there's a lot of folks that like we've talked to within the office are like, hey, hop on our podcast, and we mean it. But I mean, like, we've been so busy. So like, if you want to hop on, like, just hit us up. If you see us walking around, or send us a message, send us an email, DM us, text us.
Email us.
Yeah, just reach out. Like, we want to have you on because like I get sick of hearing John and talking to John, and I know he gets sick of talking and hearing, even though he asks me fucking trillion questions a day. Can we bleep that out? I dropped an F-bomb, but no, it's okay. We'll leave it because it's genuine, and it came from the heart, and my heart is black like coal.
We keep it
real. I'm
just
playing, real raw.
Right.
But yeah, if you want to hop on the podcast, let us know, because it just like there's so many awesome people here. It like one day I want to be able to say that we've had everyone in the office on this podcast. Like everyone,
everybody,
even like yo, Marla, we see you, Marla. Mainly, I see you. What's up, D? What's up, D? I got you. What's up, Corey? You want to hop on, Corey?
Come through.
What's up? Yeah. Or you know, we got Erwin on here. Juan,
we should.
What's up, Juan? Juan Powerlift. Juan, could you bench press me and John at the same time? One in each arm.
Already did.
Yeah, he's like done. You didn't see that? It's done. Curtains.
Fast too.
Dunzo.
Quickness.
All right, we should end this, bro. We got work to do.
Yeah. All right, cool, guys. Well, that was episode 32 of the Hustle Podcast. Hope you guys enjoyed. As always, if you guys liked it, leave a comment. Let us know what you think. Like the channel, subscribe. Also, share with your friends, family. If you're an LO or a mortgage broker and you want to get a chance to be on the podcast, let us know. Our information is in the bio above and the description below. As always, stay tuned for tomorrow, and let's get it, boys.